Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week already, Wednesday morning. Yesterday, the market saw a nice bounce after a while. So there's a fair bit to go in terms of stock-specific coverage, earnings, and, of course, the broader market as well. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning.
Hi, morning, folks. So still no deal. Yeah. And now there are all these headlines coming saying 25%, 15%, 20% will happen. So, yeah. On tenterhooks as far as India is concerned.
Yeah, maybe too much of tariff talk. Maybe we're giving it too much attention. Let it play out by itself. I mean, but the market's clearly a little bit nervous.
Yeah, I mean, we'll see what happens. Interim deal, perhaps. We don't know. But 1st of August is the deadline. Let's just take it from the top, right, in terms of the new stuff that you need to know as we start today's session. So, President Trump essentially said that India may pay between 20 and 25% tariffs, but it is not yet final. That essentially, I think, summarizes what the US president said. And let me just tell you the context of this, right? I mean, the context was that Reuters had reported earlier that a trade deal, I mean, a US-India trade deal may not come until September or October. And Reuters in that same report said that India could get potentially a higher 20 to 25% tariff rate. So, President Trump was asked whether this is true. And the response from him that India may have 20 to 25% tariff, but not yet final, was with regards to that. It was not an open-ended question to which he said, well, 20, 25%. So I think it's an important nuance in that sense. Actually, let's listen in to President Trump saying this, being asked this, and of course responding.
India is preparing to face higher U.S. tariffs between 20 and 25%. Is that what you're tracking, or what do you think the rate will be for India?
They are going to pay 25%.
Yeah, that India is preparing to face higher U.S. tariffs between 20 and 25%.
Yeah, I think so. Look, they're my friends, and he's my friend.
Is the deal with India finalized?
No, it's not.
Okay, so what rate are you expecting?
Well, we're going to see. But India's been a good friend, but India has charged basically more tariffs than almost any other country. You know that, right? Over the years. But now I'm in charge, and you just can't do that. I think the trade deals are working out very well, hopefully for everybody, but for the United States, they're very, very good.
So that's the soundbite. I mean, important to note, it was in response to a number, and he kind of sort of agreed with it. So it was not sort of, organic in terms of that response. We don't have to wait very long. We'll see what really happens. But that's the starting point. Now, U.S. equities were modestly lower yesterday. Of course, there is the FOMC, the Fed meeting tonight. Nasdaq was down about a third. The S&P was down a little bit. The 10-year on the U.S. lost about 9 basis points. There was some data as well, some macro data, which at the margin might have made some difference. But, for example, there were treasury auctions, which actually went very strong. So yields did move about 9 and, the 30-year, but down about 10, 11 basis points as well. Dollar index up about a quarter. Actually, I think we hit about 99 and then cooled off a little bit, just under it, 98.9 or so. Oil prices continued to spike up. So Brent crude about 4% higher, almost at $73 a barrel. I mean, there's no new news except the fact that President Trump, again, 2 days back, day before yesterday, basically said that Ukraine-Russia ceasefire deadline is being brought forward by, it got to get done in the next 10, 12 days or so. As I said, FOMC, the Fed decision today, we'll hear from Fed Chair Powell, etc., but most likely to be a non-event. So no change expected. And I think we'll hear some of the same stuff, which is we're waiting to see the full impact of tariffs. Had it not been for tariffs, perhaps rates would have been lower. U.S. jobs data later on Friday, perhaps a lot more important. That's the monthly jobs data. We'll tell you how labor market is holding up. There are Meta earnings later tonight. Apple and Amazon report tomorrow. So you got some big tech earnings coming through as well. On U.S.-China, the U.S. Treasury Secretary Scott Bessent said that they're still discussing the terms of a tariff truce extension. The extent The tariff deadline for negotiation expires on the 12th of August, and they're seeing whether they should sort of extend this further. Most likely, perhaps, that is what will be done. Now, just to tie in the levels here, yesterday, of course, as I said, we got a bounce market. As we were saying, yesterday was looking oversold on many short-term matrices. So we got a bounce, decent bounce. And the good thing was that it was actually a very broad-based move. If you just look at the mid and small cap part of the market, especially the small caps, very long list of volume-led gainers, 20-25 names, and we'll sort of talk about some of these individuals ones later on. So yesterday's low, because we had a bounce, becomes important, that we should not break it. 24,598 is that level. And the resistance is 25,998. We put that level out yesterday as well. Only once the market gets above that, you can say that maybe the decline is complete. That is nothing but the 61.8% retracement of the recent decline from the 24th high to the low that we saw day before yesterday. For the Nifty Bank, the low yesterday was 55,843. So similarly, that becomes the important support, which the Nifty Bank should not go below. And resistance similarly is the 61.8%, which is 56,753. So, a bit of a wait and watch. Let's see if you're able to continue with the repair and recovery. But there is this tariff headline as well. We've got to get over that hump as well. GIFT Nifty will give you a quick sense of how we're likely to start. It's a tepid, sideways kind of start, about 30 points lower. Surbhi.
Absolutely. Asian markets are actually fairly range-bound, and it's tariff, trade. That's the only headline for two of the largest economies here, India as well as China, because there's uncertainty around both. U.S. futures, by the way, have perked up. After yesterday's slightly negative session, there's about a 0.25% increase, depending on which U.S. Index you're looking at in the futures market. Now, on the trade part, just to go back to the big headline, the uncertainty around any deal with India. Hear out what U.S. Commerce Secretary Howard Lutnick had to say. He was speaking to CNBC in an interview, and he said that we've done our job in terms of negotiations, and now it's entirely up to the U.S. president.
We put in front of him the deal. He sees the deal, and he decides, do I want to do a deal with India or I don't? And that is up to him. We've done our job. They've made offers, but these countries came to the table slowly from what President Trump was hoping for. But of course, from their perspective, no one's moved as fast. For the rest of the world, we're going to have things done by Friday. And Friday is not that far away. So you should expect, we said, August 1st is the date that we're setting all these rates. And they are off to the races after that.
No deal yet with India. Let's see what happens here. With China, at least the commentary has been a little more positive. But again, over here, trade negotiators have once again reiterated that it's President Trump who holds the key. In fact, Scott Bessent, and I'm quoting him exactly, he says the meetings were very constructive. It's just that we haven't been given the sign-off. President Trump has the final say on all the trade deals. This is with respect to working out that pause, an extension of that 90-day pause in terms of China tariffs. So let's see. So this is the big overhang. Not just this, time and again, there's pharma coming back into the conversation, and we should keep that in mind when we're looking at pharma stocks, because I don't think we've seen the pricing in of a particular tariff risk when it comes to Indian pharma. Yesterday, we had a statement, coming again from Howard Lutnick. He says the president will be coming out with the pharma policy in the next 2 weeks, and he says there will be massive tariffs for companies which are not investing in America. So from an Indian perspective, IT's got its own set of issues. There's banking. Pharma has been holding up really well, but these headlines do not inspire too much confidence. So keep a watch on pharma stocks in the next couple of days as well. Central bank action. We've got, some action in Singapore today. The Monetary Authority of Singapore left rates unchanged. But in their outlook, they're acknowledging that the second half is going to be weaker than the first half. So keep that in mind. The Fed, of course, is expected to remain pat, not expected to change rates at all. 98% probability that there'll be absolutely no cut this time around. But let's watch for if there is any dissent between the voting members. That'll give the market some interesting cues and clues. But amidst all this uncertainty on trade and tariff, guess what? The IMF has increased its growth forecast for India and for the world. Global growth in 2025 is now seen at 3%, which is a 20 basis points improvement from their April forecast. And it's seen at 3.1% in 26, which is a 10 basis points improvement from what they expected in April. So it's not looking bad for India. The growth number expected for this year and next year is 6.4%. The IMF feels that the impact of tariffs is not, at least right now, it's not looking as detrimental as was feared earlier. Very quickly to talk about the flows and the levels here. We've seen some buying from those oversold levels. The Nifty finally had a decent day yesterday, but the flows picture is not encouraging, especially if you're looking at the FPI number. Again, we've got a big sell number, 4,600 crores of selling from FPIs. Good buying from domestic institutions as usual, 6,150 crores nearly of DII buying. Earnings, just want to spot one or two quick stocks. L&T has been a very steady quarter. The top line growth is fairly strong at 15%. The market will say, okay, margins haven't moved up, just under the 10% mark. But all in all, it's fairly decent. Good, order flow as well. And GE Vernova could be a real star to look at today because pristine set of numbers, very, very solid performance in line with the way the stock has run up. So Q1, they've delivered. And finally, keep JSW Steel on your radar as well because there's some relief, sigh of relief coming in for the company and the lenders because the Supreme Court yesterday, actually, it was a rare thing. They heard the review petition and they've agreed to look at a hearing again. And it's going to be an open court hearing when it comes to the Bhushan case. So that's, some positive for JSW as well. So plenty to keep us busy this morning, Nigel.
Well, that's right. But yesterday's bounce was actually encouraging. Yes, we came off oversold levels, but after a while, we're getting some earnings surprises. And you like to see a couple of earnings beats that come in through as well. So yesterday's session was good, but follow-through is going to be important. And if you look at the rollovers picture, well, we have the expiry that will play out, the monthly expiry that will play out tomorrow. And you have both the Nifty as well as the Nifty Bank, the rollovers, if you compare it on D-2 or 2 days before expiry, both are relatively low. So maybe we have plenty more in this series itself, just going by the rollovers data as well. Moving to what the FIs did, well, they added some shorts, no surprises out there. They covered some longs as well. The short positioning at around 87% and more than 1.6 lakh contracts. That's moving to the extreme end. So that was one data point that we highlighted yesterday as well. But if you look at the stock futures, well, out there was some kind of covering that we saw. And there could be some kind of arbitrage as well that's taking place out there, rollovers as well. So difficult to gauge out there, but it appears that at least was on the individual stocks, there was some covering that we saw. Moving to the options data then, and before we do that, just look at this data point. The Nifty on a day-to-day basis is making lower highs. It's also making lower lows. What you would like to see is the Nifty turns this around. Make a higher high, make a higher low. So that's another data point. But as promised, let's go to the options data. And after a while, the bails got taken off from the call writers because they were writing calls aggressively. And that's what's called the PCR to move up to around 0.8. Put writing came back into play. There was a mix of put activity at lower levels as well. And on the upside, you did see that call writers, 24,800, 24,700 call. Well, there was some shedding that we saw at those levels, even the 25,000 calls. So there was some call writers that got a little bit jittery after the bounce we saw yesterday. Though the 24,800 put, there's a mix of activity out there. The premium's around 60 rupees or thereabouts. So, those writers, they'll be hoping that the 24,700 odd level does hold out. So in the near term, we've got a broad range. Yesterday's low becomes a crucial reference point. That's important. And the resistance level comes in at around 25,000 odd. The Nifty Bank, yesterday it showed signs it wants to get past the 50 DMA. On the closing basis, it didn't decisively manage to conquer that. So you'll want the Nifty Bank actually to conquer this 50 DMA and then move to around the 20 DMA. And the other one is Reliance Industries. Yesterday from the day's low actually saw a bit of a recovery. It's pulled back a little bit from the recent peak. But Reliance Industries is some distance away from the 20 as well as the 50 DMA. So you'll want the stock to get back towards that 1,500 odd level. Reliance Industries, the Nifty Bank, they hold the key for the Nifty to bounce back higher from here on.
All right. Well, just quickly, Nigel, thanks for that. Quickly get you some calls, right? This is Prateek Parekh of Novama who says that high valuations and slowing profit of Indian equities are inverting buyer-seller incentives. He says insiders, that is promoters, PEs are on a selling spree, whereas domestic flows are slowing. FI flows are hence now critical, but India's appeal amongst EMs is fading given a high valuation premium and a blunted earnings edge. Essentially, he adds sellers are stimulated while buyers bide their time, and this risks stalling an aging bull market. Even so, he says, policy easing large enough to revive earnings growth could reverse this dynamic. Caution is particularly warranted in small and mid caps given their larger valuation earnings wedge.